Actually an inherent flaw of most investors that they never have actually operated a business.
Mm,
You can do as many case studies and simulations as possible. You can, model every sort of scenario financially that a business may go through, but there's something to be said about actually being in the trenches day to day. Waking up in the middle of the night because you have a presentation that you have to do in the morning for a large customer, and then having to pivot that 5 times right before the meeting, getting on planes and going to conferences and standing I mean, all of these things are what it takes to be successful. And I think, anyone can have a relatively strong idea, and be capable and talented. But the difference is the discipline, the resilience, and overall the endurance that it takes to actually bring that idea to life in terms of valuable execution. And so, I think that all the folks that let me help them along the way, which, in some capacities it was much more hands-on, some of it was hands-off. My initial goal was I want to be as well-rounded of an operator as possible. And so I was just grabbing up as many experiences in as many different sectors as I could.
Hi, everyone, and thank you for joining us for Features with Hello Advisor. This is a special content series where we invite founders and individuals that work in the startup world to share their stories and for us to hear from their experiences. Now, today we have with us Nassir Criss from 68 Capital. Hi, Nassir.
Hello, how are you today?
Good. How are you?
I'm doing well. I'm super excited to be here. Huge Hello Advisor advocate. So I'm excited for this conversation.
Me too, me too. I'm so glad we're able to catch you in between your travels and your work. We're super excited to hear from you today. So to kick us off, how about you tell us a little bit about yourself, how you got started, and how you entered the world of venture capital?
Absolutely.
Mhm.
And again, just thank you for the platform, for all the great work that you all are doing. Super excited about it. Um, I got my start as an entrepreneur. So, and in some ways, I still am an entrepreneur. I have a multitude of projects and ventures that I have kind of going on simultaneously. But I started off as an operator, built my first business when I was an undergrad. From there, went on to assist and have some sort of role in a host of different startups. By the time I was 22, I think I'd been a part of building like 10 to 15 startups in some capacity, and had a chance to actually be the first employee at a venture backed startup. And so I worked very closely in a kind of almost chief of staff role with the CEO at the time, and understanding all functions of the business from product to sales to engineering to hiring, raising capital, all of it. And that was where I got really fascinated about private capital allocation, in particular private equity and VC. I was told that there's a very traditional path that you have to take if you want to be in VC. You either go to grad school, get an MBA at a top 5 school, and then make that transition via recruiting, or you go work on Wall Street for a handful of years before you actually get the nudge or the invite to come work in VC. And my path was a bit more like this, and I was able to kind of use some of my operative background and experience to parlay that into why I think I'd be a good fit at sourcing good deals, helping those founders after the check had been written, and then continuing to kind of maintain brand and visibility for whatever firm that I represented. And I had a firm take a chance on me in 2020. It was a growth equity firm, so a little bit later stage. I saw some buyout opportunities. I saw some companies go public while I was there. I saw some M&A, activity, and then realized I wanted to be closer to what I call the action, the early stage action with operators. And so about 4.5, 5 years ago, I transitioned into the role that I'm in with 68 Capital now. So that's kind of the journey of how I got to 68. And it's been fun. I've definitely enjoyed it. I love the actual work of being a VC and getting to meet with a variety of different brilliant people that are building great companies. And I'm very grateful for, for the opportunity to be in the position that I'm in.
Hmm. Wow, that's awesome. Yeah. And I remember I just noticed you said you worked for like 15 to 20 startups before sort of entering the VC space. Like that's a lot of experience. And even though it's not necessarily the traditional path, like you mentioned, that still probably gives you like great perspective on like the life of like a founder and a startup. Um, how does that experience sort of factor into your work as an investor now? And why do you think that's still valuable, even if you didn't go, the path that most venture capitalists take?
Yeah, I think that it's actually an inherent flaw of most investors that they never have actually operated a business.
Mm,
You can do as many case studies and simulations as possible. You can, model every sort of scenario financially that a business may go through, but there's something to be said about actually being in the trenches day to day, waking up in the middle of the night because you have the presentation that you have to do in the morning for a large customer, and then having to pivot that 5 times right before the meeting, getting on planes and going to conferences and standing I mean, all of these things are what it takes to be successful. And I think, anyone can have a relatively strong idea, and be capable and talented. But the difference is the discipline, the resilience, and overall the endurance that it takes to actually bring that idea to life in terms of valuable execution. And so, I think that all the folks that let me help them along the way, which, in some capacities it was much more hands-on, some of it was hands-off. My initial goal was I want to be as well-rounded of an operator as possible. And so I was just grabbing up as many experiences in as many different sectors as I could. Where I sit now, being on the investor side, I think not only do I have the empathy to be able to relate to founders. I mean, it's a hard job, right? Like, I think that it's been glamorized a bit, and this idea of entrepreneurship is very sexy to some, especially in the media, but it's difficult. And so I have that level of kind of emotional awareness of what it actually takes to grow into a successful outcome. And then operatively, I truly understand things in businesses. I mean, I'm able to kind of spot around corners just given some of the things that I've seen. And at the very least, right, while I may not be able to tell a founder everything that they should do at this point, I mean, I review thousands of companies each year. I don't go into deep diligence with all of them, but enough to be able to kind of spot certain things. I do have the capacity to tell founders exactly what they shouldn't do, right? And I think being able to remove some of the obstacles as an entrepreneur is going through their path of acceleration is key. And I think we're also, it's kind of me going on a tangent a bit, but we're in a time where the value differentiation of investors is very hard to discover, in the sense that if you're not a tier one brand, right, Sequoia and Andreessen, whatever, that clearly has the affinity to be able to influence outcomes of your entrepreneurs more readily than maybe other firms, what are you doing for your founders beyond balance on the capital, or excuse me, capital on the balance sheet? And so I spend a lot of time really trying to work with my entrepreneurs and figure out what are their unique challenges. Where can I assist? And if I can't assist, where can I introduce them to other people in our network? Where can we make strategic hires? Where can we build add-ons in the product to make that path more seamless for them?
Mm-hmm. Yeah, that's awesome. I love how, empathetic your approach is too. So yeah, let's talk a little bit more about your work in the venture capital space. If you could tell us like what areas you focus in, if you're focused on an industry, if you're focused on startups at a certain stage, and a little bit why you chose that area of focus.
Absolutely. Yeah. So my industry training is in B2B SaaS. So, I was trained as an institutional investor, purely looking at enterprise software products that have tangible recurring revenue. Typically, they have longer historical financials, and it's just easier to predict models for those types of businesses. You never can predict exactly what's going to happen, but they're a bit more structured and regimented. As I've kind of gone on over the years, I've become much more of a generalist. And so I've invested in food and beverage companies, creator economy, future of work, health and wellness, just things that I think have been interesting to me holistically, but were built by, really compelling founders that I believe truly understood their businesses, truly understood their markets, and had a real opportunity to go after success. As I started to compile all of those experiences, I realized that my passion and what I believe is kind of deeply attached to my purpose here, my time, is to work on projects and work with people that are building for the betterment of human advancement. I've been able to categorically kind of skew that down to a few different areas of things that I, believe make a better quality of life for any specific person in any given place that they may be. And those things are financial inclusion and resilience, climate and geographic security, education, work opportunities, and then access to technology and technology's development. And so now I'm skewing a bit more to fintech platforms, digital healthcare platforms, ed tech, future of work, and HR tech. Still dabbling, obviously, in creator economy, and I've had some interest in sports and things like that. But I want to build a holistic portfolio where all of our companies can kind of build on each other's momentum, so that as we're thinking about the populations that they adversely or inversely are kind of positively affecting, there's a full suite of products that genuinely can make someone's life better, right? Either allowing them to find healthcare faster, or get hired faster, or be able to live more efficiently through their advent of AI into hardware products within their homes. I mean, these are the types of things that I'm really interested in, and that over the next 10 to 20 years, I'm going to be excited about investing in.
Yeah, that's awesome. Definitely want to hear more about that. And I think you touched on it, but you are working on a project that is an international venture capital vehicle designed to invest in entrepreneurs and taking sort of this mission of yours global to different regions like Latin America, the Middle East, and North Africa, and Southeast Asia. Could you tell us a little bit more on what that project is, and why maybe why you're taking it global as well, what opportunities you see abroad?
Absolutely. Yeah.
Mm.
Thank you for this. I haven't formally practiced the pitch yet. We're still in the
Well,
early
this
innings.
could be your start.
Absolutely, absolutely. But I'll share, some of the research that we've done, and why I think
Hmm.
it's compelling. So, about 2.5 years ago, I started to see more activity and buzz in Africa and in the Middle East. I've been there a handful of times and met with folks, and I thought to myself, this is incredible. I mean, the scale and rate at which technology is developing there is much faster than it is here. I think we've kind of reached a stagnant period almost in the US where differentiation is so difficult. But because technology is now being democratized across other places and around the world, we're now seeing that acceleration, that boom almost that Silicon Valley had, let's call it 15 to 25 years ago, happening in other parts of the world. And so I thought to myself, is there a way that a private American partner can invest in these companies in their growth stages around the world while they are trying to enter other regions, right? So that scalability of a startup that's maybe being built in Dubai, but wants to have a presence in the UK, or someone that's building a company in Berlin, but wants to move to American markets. That critical mass point of when, a startup company goes from owning, maybe a portion of the market share to truly being a market leader usually
Mhm.
comes when they're able to expand their geographic presence and able to encompass more customers. And so that's the emphasis, kind of tie that to what I just told you about looking at companies that are building in these human advancement sectors. And then we come into 2025 where, we won't get into deep politics, but there is so much tension in terms of economic mobility across the globe, much of which is being driven by the US and some of our policies changing drastically, but also the response that we're seeing from other countries as they're now starting to say, okay, we need to take more risk in our innovation. We need to spread capital more freely. And so I do believe that we are in a really interesting inflection point where the people that are able to navigate this change are going to be able to do really, really well and are going to have a significant amount of impact. And so that's really what the project is building a privatized vehicle that can invest in the best of the rest around the world and be able to help
Mhm.
them expand cross borders and scale those companies efficiently as they go towards liquidity events, exits, acquisitions, IPOs, et cetera. And so that's what I'm setting up. And it's multi-pronged. I mean, there's the capital piece, but there's also a strategic partnership piece. There's a bit of
Mhm.
a government piece. There's a bit of an economic development piece. The two markets that we're going to launch in as test markets that we believe we have kind of the most affinity with some of our partners are the UAE, and then EU. And so that's kind of the testing grounds right now. But if it works out well and we're able to build this interconnected ecosystem, then I'm excited to accelerate towards a closing of a fund where we'll be able to do this work more meaningfully and targeted. So yeah, thank you for asking that. I'm excited to see what the next 365 days yields us.
Yeah, I was very curious when you shared that with me before this interview. But we'll definitely be keeping an eye on that, and I hope it really yields some amazing things. Um, I do want to transition the conversation to maybe some more general questions about VC work. And
Yeah,
speaking from your experience, what your takes are on some of these questions. So you've mentioned a ton of industries that you've either worked in, are interested in, or are looking to learn more about. Could you share some of the trends in industries that you have your eye on that, others maybe should keep their eye on as well? And maybe how have your interests in industries like intersected over the past? Where do you see, collisions happening, collaborations, and things like that?
yeah, that's an awesome question. So broadly, I try to stay as close as possible to people and the problems that they're facing on a day-to-day basis. Not that I'm always looking for problems. I'm not a toxic person, but I am always thinking of solutions to problems. And I think that we get maybe so far away from just the basics of what makes a person's life easier to live or better to live because of market dynamics and money and technology, et cetera. But A lot of how I'm thinking about investing in technologies is truly informed by what are the most painful problems that people are experiencing in their day to day, or in their workflow, or in their capability of building relationships, or in their sales processes and things like this. And that really just comes from having a variety of conversations with people, at all levels of life. And so, a couple of the things that I'm very excited about that I'm watching that are not even necessarily trends, but I think are unique problems that need to be solved over the next couple of years. I default a lot to the creator economy. There are so many opportunities right now for people to build their own businesses. I think this idea of the solopreneur is going to be something that is very normal. The next generation of kids that are growing up right now don't have ambitions of being doctors and lawyers like I think we all were told when we were younger, right? Like they want to be YouTubers, they want to make money on Instagram, they want to have boutique shops. So, okay, if you think about a person as an entity or a person as their own corporation, if they can build an influence of other people that want to exchange value to them for whatever reason, right? Because viewership now is currency. You also think about the offshoots of products that they can now build. I think about Mr. Beast often and how he built this massive following via his YouTube, but he has burgers and he has restaurants and he has small businesses that he owns and he has, apparel companies and things like that. How are we thinking about as investors? How are we thinking about not only supporting that work, but also whatever growth that, a industry is going to go through? What are going to be some of the pain points? I immediately go to, okay, if you look at some of the data, most of these people are extremely talented, extremely intelligent, capable people. They don't have finance backgrounds. They don't have legal backgrounds. They don't have business development backgrounds, et cetera. And while those are all things that you can get a kind of basic understanding of, how are we building technologies and or support systems to be able to enable those things, right? And so the idea comes to my mind of a startup studio of sorts, or a company of sorts that can be able to kind of provide those suite of products that allow that creator to do what they love most, which is to create, and making the rest of the process seamless. So that's one example of how I think about that. I think if you were to talk about this kind of collision of industries that I'm very interested in, I mean, that in and of itself is literally the future of work, right? And so are there kind of other startups that exist that can kind of build those bridges between the two to be able to enable that? Do we see a future where creators are now going to be partnering more holistically with corporates, and not just for brand campaigns, but as true, drivers and economic delivers of go-to-market strategies, right? Like, do we foresee a large, like a JP Morgan, for instance, building out an entire asset category for creators, given that they transact so much? And then what does that look like in the interim, right? Like, how do you make that visible and easily seamless? And some of these things are already happening, but I do think that we're going to see an acceleration and more kind of foundation of this. And so that's how I'm thinking about the future. And again, within any of the industries that I'm really interested in, always first going for, okay, where's there a critical mass of problems? How can we build solutions that support or remove or alleviate or make those problems, less harsh? Those are the types of founders I think that are going to be building things that have true longevity in the long run.
Mhm. Yeah, thank you for that insight. And so kind of going off of that, when we think about the idea of the solopreneur becoming super popular, and more people, especially this upcoming generation, entering that creator economy space and starting their own sort of business or venture. It's weird to think of like influencers as like businesses right now, but I mean, I guess they ought to consider themselves as one. But but as we see more and more people enter that space, the market's only going to get more and more saturated. I mean, like already there's so much like competition in the digital space. Um, Influencers sort of occupying and creating the same sort of content. So for founders looking to enter or are already currently operating in these industries, what should they know if they want to stand out? And especially for those building ventures and looking for investment, what should they consider if they're looking to raise and attract funds?
I think it depends really on what the founder's goal is.
Mm,
I think that we've pushed VC as an opportunity for people to grow their businesses very quickly into large outcomes. But ultimately, the first thing that I would do if I was building something new right now today would be to ask myself, I mean, what is the threshold that I want this company to get to? that is going to inform all the decisions that I make around hiring, around our go-to-market strategy, around the product orientation, things like that. And so that would be the first thing is really, I would encourage founders to get a clear picture and idea of where exactly they want their business to go.
Mm-hmm.
Separately, the next thing that I would kind of walk a founder through as we're talking about advising or thinking about strategically where they are in the market and how to capture that piece of the market is how do you distinguish yourself and then how do you enable disruption?
Mm-hmm.
You talk about the influencers stuff. I go on my For You page all the time on Instagram and I just see, I feel like a million people doing the same thing.
Mm-hmm.
And it's variations of it, right? And they'll have 50K followers, 100K followers, etc. And not to be misstated, there is something about attaching yourself to trends, right? Things that are going to
Mm-hmm.
get eyes on you and then be able to get people in your funnel, right? Because that's essentially what all of this is, sales and marketing.
Mm-hmm.
However, that next exchange between someone being entertained and someone now exchanging value, so going from engagement to actually paying you for something, is a completely different ball game. And in
Mm-hmm.
that, you have to have an authentic core of what you're offering to people, and it has to be genuine. I mean, that is what I've seen the most successful people that maybe even don't have massive followings, but are generating so much revenue. That's what they've
Mm-hmm.
done. They've maybe utilized some of the trends and momentum to get people into their funnel. But once they have those people bought in, it's a lot about authenticity. It's a lot about differentiation. It's a lot about leaning into who they are as an influencer and then being
Mm-hmm.
able to kind of translate that to their audience and give their audience pieces to interact within them. It's the same thing for founders. I tell founders to build solutions for problems. Don't just build something that you think an investor is going to say, oh, wow, like 35% of this last quarter's dollars have gone to AI and you slapped AI onto your company and now you were going to
Mm-hmm.
invest in it. Because that's actually not the truth. I think
Mm-hmm.
optically it seems like that from a news standpoint, but there's so many layers of things that are going into why an investor decides to invest in something beyond just the sector. And most of it has to do with, does that founder have an intimate understanding of their customer segment? Can they predict almost to a T what their pain points are going to be today, tomorrow, 5 years from now, 10 years from now? And can they build a product cycle that's constantly ahead of that? Are they delivering true value? And do they have a differentiated kind of value set and brand that makes customers want to interact with them versus someone else that might be saying or delivering something that's very similar? And that
Mm-hmm.
takes a lot of, without getting too hippy dippy, I think that takes a lot of introspection on the part of a founder and on the part of an operator to be able to truly understand what it is that their offering can bring to the world and then how they can translate that to their company. And so my advice would be um, first look at, as an entrepreneur, aspiring entrepreneur, current entrepreneur, what skill sets and strengths do you have that you've noticed are unique to yourself and that others don't have? What experience do you have that informs the type of industry that you want to build in? And after you've kind of figured out what your secret sauce is, then it's really about, okay, how do I orient these things in a way that allows me to build a product, a platform, a business, a culture, and a team to drive these values forward and be able to share these values with other people? That process of iteration over time is how you do an efficient kind of value exchange with people where they then say, wow, I can see that you're an expert in this. I see that you've built something that actually helps me because I have a similar problem. I now want to
Mm-hmm.
exchange XYZ value for that. And so there's a ton of exercises that I do with founders, but just keeping it kind of broad to answer your question, that's how I would maybe think about some of that and trying to parcel through between trends and stability and long-term success and everything in
Mm-hmm.
between.
Yeah, I love that. That's great advice. And I know we got a lot of founders that are listening or will be listening to this recording, so I hope that helps them out as well. Um, I'm not gonna ask you to reveal your secret sauce, Sincere, but you did touch on like how you work with your founders. I kind of got that vibe because investors do play a role beyond providing funding, and that's mentorship for their portfolio companies. So I just kind of wanted to get your take and your approach on how you support your portfolio companies, maybe when things don't go as well or as planned, you know. You don't know everything that's going to happen and mistakes or challenges are going to come up. So, how do you help support your companies through those challenges? Um, what sort of approach do you take and why is feedback so important when communicating with your startups?
You got some awesome questions.
Oh, thank you.
I appreciate that. there are two things that I think are extremely important in any business relationship, but particularly between founders and investors. And um, two things I try to embody when I am communicating with my founders. Trust is one of them, and transparency is the other.
Mm-hmm.
I've had a lot of very tough conversations where I'm sure if you were to talk to someone on the other side, they'd say, God, I hate that Nas said that to me, or I hated that conversation. But um, oftentimes people circle back and tell me that they were extremely appreciative of some of the thoughts shared. And the other thing too is, yeah, I try to live my life in a way, and it translates to my profession, obviously, and how I kind of interact with founders. Very low ego, high humility, um, because I don't know everything. And while there may be some things that I feel more confident about, I'm always open and willing to learn and to listen. And so, to your question, it changes and it varies. We have some founders in our portfolio that are super experienced, entrepreneurial founders and have done it. And there's very little feedback that's needed from me. They're kind of like hustling and bustling and on their path and doing great. And, besides our updates or check-ins that we have at various moments throughout the year, there's not much that I have to do always. It's more so maintenance and more so support, right? And being kind of a constant anchor of positivity for them and unlocking different channels to customers, partners, other investors, et cetera. And then we have other founders who are still growing and developing and are facing kind of various changes and challenges within their business. And in those ways and in those relationships, I'm a bit more hands on, but it comes back
Mm-hmm.
to trust and transparency. And so I always try to put myself in their shoes and understand where they're coming from and what's going on. I mean, they're not just responsible for themselves, they're responsible for their employees and their stakeholders. They're also, kind of indirectly responsible for the families of their employees and partners and things like that, right? And so whenever I am making an informed decision to say anything in a conversation, I am making sure that it is coming from a place of data. So there's information that's informing why I'm saying what I'm saying, but also, again, that empathy of I want what's best for my founders. My founders succeeding is me succeeding. And I have to be willing and okay to be able to speak on things that may be uncomfortable at times,
Mm-hmm.
for the betterment of whatever the business might be, for the betterment of the relationship, for the betterment of some of their activities within and around the business. So that's how I try to lead. Very very much so a servant leadership mentality.
Mm-hmm.
And I would hope that a lot of my founders would be able to come to you and say, Nas is great. If anyone else says anything else, we got to get them out here. No, I'm kidding. But yeah, no, I think that it's going well so far, and I think that we've seen some successful outcomes from some of our founders.
Mm-hmm.
So I plan to double down on that.
Yeah, I love that. And I guess we'll find out after we release this recording exactly how well you're doing, Naz, but I'm sure it's great. I'm sure it's great. Um, So we're nearing sort of the end of our time together, but I do still have a couple last questions for you. Some questions that will kind of tie up our conversation, and open it up to some broader topics. So we didn't get a lot of time to talk about 68 Capital and sort of the mission with the firm. But I know a focus of the firm is to invest in the bottom 10% of founders that receive capital allocation annually. And this includes a lot of founders from overlooked or underrepresented backgrounds, founders of color, women, first generation Americans, veterans. So why do you think that founders of these backgrounds are still being overlooked when it comes to receiving funding? And why do they still struggle in sort of securing that for their businesses?
This is a deeply entrenched question that I'm probably not
Mm,
going to be able to answer in totality right now in the limited time we
hmm
have. But I think there's a variety of factors. You know, Historically, the way that venture capital is set up and how venture heuristics are built, it's actually not made for everyone. Like there is a power dynamic of how much capital is supposed to go in, how much of that is supposed to be managed by what types of people, and then how much of that is supposed to go to what types of founders. And that is why inherently you've seen some of the massive outcomes of venture. Venture itself is actually not as powerful once it starts to become democratized. It actually starts to evolve into more of a micro private equity model where the return values are lower, even though they're more frequent and you have more people that are receiving dollars. So the model itself inherently, like just as a grounding foundation, let's just say is broken. in the
Mhm.
sense that it it can it cannot fundamentally function the way that it's functioning for the greatest benefit of people inherently. Now,
Mhm.
I disagree with that, obviously, right? I think that there are ways that you can build a hybrid-esque version of what venture is, maybe mix in some PE, maybe mix in some sort of other alternative secondary trading, and build an environment where you're not only going after massive financial returns, but you are creating this cyclical change of
Mhm.
economic development and return into communities as well. And that's where the impact piece comes. And that's where the work with 68 Capital has been so valuable over the last couple of years, and something that I'm grateful that I've got to be a part of is, truly understanding that opportunity is inherently where other people aren't looking, right? Like even if
Mhm.
you want to go way back, well, not way back, but maybe a couple hundred years to, the settlers coming to the U.S. in pursuit of,
Mhm.
life, liberty, happiness, all these things. They came to an unknown place to discover unknown resources that then serviced a population of people that, weren't necessarily inherently aware of that based on where they were in their part of the world. And I think
Mhm.
about this kind of roadmap that we're making now into this uncharted future, very much so the same. There are communities of people that represent large communities across the globe that have not been given the opportunity to have access to an advancement or a better quality of life using technology. And so I always try to have these conversations with investors. And I think that there's a ton of socioeconomic, there's a ton of political, there's so many barriers that are in the way of getting someone to think outside of believing that one group is particularly superior than another group. And it's just like, that's just nonsense, right? Like, it's like we all functionally do the same things, right? Biologically as humans, which means that inherently we all face certain problems. And if there are entire populations and swaths of people that are facing these problems, but not necessarily being given access to the resources that allow them to solve those problems, we are missing out on not just making the world a better place, but ultimately financial returns. Think about, if we set up true technology, cloud infrastructure, computing, access to AI in a place like Africa that has the youngest global population, right, and the fastest
Mhm.
growing population. What does that look like for the first investors that take a chance on that, right? In terms of capital, right? You're talking about a modern day Rockefeller, right? Like these
Mhm.
massive types of kind of outcomes that can be built over the next couple of years. And so what we focus on at 68 is doing that, but in a microcosm. So investing in the Midwest and the South regions that are outside of Silicon Valley and New York, in the
Mhm.
bottom 10% of founders that receive capital annually. And our goal and what we have demonstrated is not just proving that other types of founders deserve capital, but proving that they're actually more competitive. They're more
Mhm.
competitive, they're more resilient, they're more disciplined, and they can go further if they're able and given kind of even a slither of the resources that maybe other groups that come from certain schools or certain backgrounds or certain geographies get. I think that work is meaningful. I think that it's impactful, and I think over the next couple of years we're going to see some pretty large returns and outcomes from some of those founders. And so I'm excited to kind of level the playing field in terms of how we create uh, equitable opportunity for as many people as possible.
Mhm. Yeah, that's awesome. And I can't wait to see what will happen. And yeah, I thank you for answering that question. I know it's not easy, the question of equity, but I think that was a great answer. Um, and so to close us off, maybe a more personal question. Just a theme from this conversation, and I did read your lessons from 2024 while preparing for this interview. I thought that was really wonderfully written.
Thank you.
Yeah, and I love how diverse your interests are. And so sort of a theme that I've gotten just from talking to you is this theme of intersectionality between interests, between people, geographies, and the like. So I was just curious, what does intersectionality mean to you, and in the context of the startup world, and why has it become so relevant recently? Should more people be paying attention to intersectional startups and work?
I think as we are going through what I want to say is turbulence
Mm-hmm.
in our world in a variety of different ways, which is not new. Like this has happened. Quick side tangent. A mentor of mine told me when I was younger, he only reads two types of books: history books and then biographies. History is always going to repeat itself, so it'll inform what the future is like. And
Mm-hmm.
biographies of great people, you can always learn lessons about the small things that people did in their journeys to become greater versions of themselves and translate that to yourself. And so when I think about history, if you really kind of look at it from like a wider scale, it may seem that we're in a compressed time where just a lot of bad things or a lot of different things, let's say like that, are happening.
Hmm.
But there's been moments in history where things like this have happened all the time, right? And the people that are able to kind of come out of these opportunities or to come out of these moments in history with opportunities to do things greater are usually the people that make history, right? And that build legacies. And so as I think about intersectionality, I'm feeling that the world is now starting to think about things with a multitude of contexts. Before, it might have seemed that you could only make money or you could only do good, and that's why the worlds of impact and private capital are so far apart.
Hmm.
But now we're seeing people that are like, no, there are double bottom line solutions where we can do well and we can do good. I think because there is so much extremity in either side, you're now seeing people want to figure out, okay, how can we do both? How can I build a company that's really great, but also employs people that come from a particular place in the country or around the world? How can
Hmm.
I build a technology that utilizes, less of the environment's resources, but still has a great impact on people's daily usage of it? That's important. We are over inundated with so many different types of things now that I believe we're seeing a reversal of people back to kind of core values, right? And remembering that at the end of the day, like we are all people, right? Alexis, like it's like everyone's trying to win. We live in a hyper competitive environment. Don't get me wrong. Like I know that I'm very impact focused, but I also am a huge competitor. And
Hmm.
I understand that, for people to win, there have to be people that lose. But is losing creating an environment of suffering for someone else? Whereas it's, can we create two solutions at once? Can we all
Hmm.
walk away from the table with, maybe someone walks away with something that's slightly better, but someone's not walking away with nothing, right? So that mindset shifting, I think, is what has informed me. I've always been the type of person that truly values where I come from and every opportunity that I've gotten to meet people that have helped me along the way. And I've never looked at people or opportunities as just simply stepping stones. I've always looked at how can I give the most to where I am. And that's kind of why I have this intersectionality. I know that I was trying to pull down the thoughts into like where I am, why I am where I am. But, you know, I want my investing style to follow that. Every
Hmm.
time I meet with a founder or I evaluate an opportunity or I diligence a deal in whatever industry it may be in, I'm constantly looking at what are the 5, 6, 7, 8, 9, 10 things beyond just my top 5 opportunities where I can create opportunity for at least one other person or
Hmm.
create a chance for someone to do something differently, at least in another place, right? That is how you build a sustainable economy. And that I think is how you build an environment of innovation and an environment of change. And we're going to just start to see more people that care about that because being on either side extremely is not benefiting anyone. And majority of the people are here, right? Like they're here
Hmm.
in the middle, right? Like no one is kind of not no one, but there are fewer people that are strung to one side or the other.
Hmm.
And I think we're going to start to see technology start to close some of those gaps. And my hope is that the right types of people and some of the smartest people will figure out ways to kind of bridge those gaps together too. So I ranted a bit there, but that was a great question.
No, I love that. And honestly, what a what a well thought out and well put answer, Nasir. But yeah, thank you so much for that input, and a bit of that vulnerability as well. And I think that's a great way to end this session. So thank you so much again for joining us, and for sharing a bit of your story, sharing from your experiences.
Yeah, thank you.
Yeah, and we'll see everyone for our next feature interview. Thanks.